Hey guys, it's Andrew from Location again, and as ever, I'm joined by good friend Michael Webb, Director of Mortgage Republic based in Brandon, to quiz him about what's happening and topical in the minefield that's the mortgage world at the moment. So, Michael, thanks for joining me.
You're welcome.
This week's question, Michael, this has come through me via 3-4 conversations I've had this week with clients. Michael, question this week: why is it taking my mortgage lender 4 weeks to arrange a survey on the property I'm looking to buy?
Yeah, that's an interesting question. 4 weeks is good. So the reality is volume and access to surveyors. So lenders will have contracts in place with different surveying companies. Typically, they are with much bigger surveying companies who will use their own surveyors in most cases, but then panel out to smaller firms when volumes get too big. And then those reports go back to the lender. You can't instruct your own. It has to be the lender's instructed surveyor. The increase in volume is just causing issues. There's only so many surveyors. So therefore, let's say a surveyor can do 5 surveys in a day, maybe 4 surveys in a day. I don't know. If you're a surveyor, please comment down below. Tell me how many you can do in a day. I guess that depends on if you've got to drive an hour or 2 hours between your locations. But if you're in a town like Thetford, for example, and all your surveys are in Thetford, you like 10 minutes to any one point. So you might get 4 or 5 done. So yeah, it's volume and capacity. So therefore, it's booking further and further ahead. The 4 weeks is about average, maybe. We've had some booked out at 9 weeks for some of our applications. So 9 weeks in advance. So we've had applications agreed subject to valuation and then had to wait 9 weeks for the surveyor to be available to go out. They're more niche lenders. Your high street lenders are probably more capable at, they're doing volume anyway. So the surveying firms they're working with should be able to get out within 4 weeks. It is also going to be geography specific. So there might be people watching here going, well, hang on, I had a survey booked like 3 days after. And that might just be that there's more surveyors in that area that are covering it, or there's less volume in that specific postcode area. So it is going to be volume of transactions, volume of required surveys, and obviously the availability of it. Now, more and more lenders as well are going over to electronic valuations. So what you may also find is, as someone's selling, you might go, hang on, I haven't had a survey. What's going on? So be aware that even on purchases, lenders are now doing electronic valuations. This is very common where the property that is being purchased, they can see is mortgaged already, because they can see that on a title check that there's a charge from a mortgage lender, and is fairly new and fairly standard. And the surveyor, they'll ping it to a surveyor, and the surveyor will look online and go, right, well, this property sold 2 years ago as well for 250. The market's done this. We can see that it's already mortgaged, potentially already with them, but another high street lender, we know they don't lend on anything obscure. We think it's worth 275. Bang, done. Report, send it off.
Okay, so one would think then, I mean, because my question was going to be, has the delay been forced because of the upward trajectory in interest rates, and therefore there's less electronic valuations and more physical valuations being carried out?
No, I'd say there's a trend to more electronic valuations. Okay. There is just a massive increase in valuation requirement. Now, here is a real risk, okay? And we've come across this a bit. So you apply, you secure an interest rate, okay? Yep. You then wait 4 weeks for your valuation. Nothing you can do about that. The property is downvalued. The property is not suitable. It has issues that then mean the lender decline it. We're in a situation where some lenders will allow you to switch the property and keep the interest rate you applied for. Most lenders will say you need to apply again on our current interest rates. So you then go and secure another property. You did have a 2.29, now you've got a 2.75. And that is causing people to go, well, my payment was £800, it's now £890. I can't offer the same amount of money. So if we see more of this, you might see people go, well, I know it's on for £250, but actually my offer is now £230.
Interesting. Very, very
and on down valuations, the information that I've got nationally, and this is again fluid, it will be changing daily, but broadly speaking, we're seeing 1 in 5 purchase applications downvalued as a national statistic.
Yeah.
So there will be geographical differences where 60% are downvalued and some where none are downvalued. Yeah.
Yes.
But the average statistic that we are being told is 1 in 5. And that is potentially where people are pushing their offers too far for surveyors to feel comfortable. And they're then kind of trying to, as surveyors often do, drag that market back.
Very, very interesting. Do you know, I had a surveyor that arrived here from Cambridge the other day, which I know is only 40 miles down the 45 miles down the road, but I just thought it was very, very strange that we didn't have a surveyor more locally to us. And I said, well, how practical is this for you? And he said, I'm in Cambridge. I was in Cambridge this morning. I'm in Thetford now, and I'm going down to Essex this afternoon. So he could only get 3 surveys in the day. Absolutely bonkers. Absolutely bonkers. But hopefully that's answered your questions. Why is it taking my mortgage lender 4 weeks to arrange a survey? Michael, as always, the fountain of knowledge, has been able to answer that for us. Michael, thanks for joining us again this week.
You're welcome.
And thanks for watching. Don't forget, hit subscribe and share this across your social platforms if you think it would be helpful to your friends and peer group. Really appreciate it. Thanks for watching.
Lovely. Thank you, Andrew.